Good morning, traders. It's Monday, April the 7th, 2025, and welcome to your strategic market overview with Enuit. Today, we bring you a comprehensive analysis of the global commodities landscape shaped by the intensifying geopolitical events and evolving trade dynamics. Let's begin with the major headline shaking global markets, the Liberation Day tariffs, which are set to take effect on April the 10th. And the additional elevated tariffs on Canada, Mexico, EU, Japan, China. This bold move aimed at correcting what the administration sees as global trade imbalances has already triggered retaliatory tariffs from China, including export controls on rare earth metals critical to US industries like aerospace and electric vehicles. Countries across the globe, including EU, Canada, and Japan, are responding or may respond with reciprocal measures, further escalating trade tensions and creating a highly volatile environment for traders. In the oil and energy markets, despite a recent uptick in oil prices driven by this geopolitical uncertainty, the market remains oversupplied. OPEC is easing production cuts, while non-OPEC supplies, particularly from the US and Brazil, continue to rise, capping any sustained price growth. With global growth concerns now amplified by trade tensions, oil prices have slumped, reflecting fears of an economic slowdown. Traders should stay agile, prioritize flexible hedging, and closely monitor production and policy shifts among key exporters. Obviously, gold prices are reaching record highs, driven by a flight to safety as investors seek shelter from the chaos of trade wars and the geopolitical risk. If tensions continue to escalate, expect gold to remain a strong performer. Using gold as a hedge against market and currency volatility could be a wise move in today's uncertain climate. Copper and other industrial metals have experienced a surge due to supply constraints and resilient global demand. However, the broader outlook remains mixed. Trade frictions and shifts in US policy, particularly around the tariffs and sourcing, could disrupt pricing and availability. For metals traders, this is a time to watch for policy shifts in the US and China, assess alternative sources, and possibly increase inventory of critical materials like rare earths. In the ag sector, the global agricultural trade is under pressure. The new tariffs are disrupting traditional export flows, especially for soybeans, wheat, and corn. Countries reliant on US markets may now face oversupply, while others face shortages. Traders should look for arbitrage opportunities in regions affected by supply imbalances and stay updated on shifting trade flows. The strategic advice that we could give is for metals, monitor China's export controls, diversify your sources, and consider stockpiling rare earth metals. For ags, follow the tariff developments closely and anticipate price swings based on changing export routes. For energy, track global responses to tariffs and geopolitical disruptions to anticipate the supply impacts and price shifts. Diversify and hedge. Utilize dynamic hedging strategies and diversify sourcing to reduce your exposure to volatile markets. And obviously, as usual, stay informed. In these rapidly shifting conditions, reliable real-time information is your most powerful tool. While some argue that these tariffs may boost US manufacturing and serve as leverage in trade negotiations, they also risk higher consumer prices, supply chain disruptions, and global economic instability. Elon Musk has recently advocated for free trade between the US and Europe, which, perhaps if realized, could help balance some of the negative effects, particularly for sectors like tech and automotive. As the global trade environment continues to evolve, traders and businesses must remain vigilant, adaptable, and strategic. At Enuit, we're here to help you navigate this complex market landscape with our robust ETRM solution that empowers smarter, faster, and more resilient trading decisions. Thank you for tuning in. Follow Enuit for weekly insights to stay ahead in today's rapidly changing global market.